You owe the IRS money. You can't pay it all at once. So you do what seems like the responsible thing. You set up a payment plan. And then you find out the hard way that the IRS payment plan is not what most people think. I'm James Duff, licensed CPA, and in this video, I'm going to tell you exactly what the IRS doesn't tell you before you sign up, the gotchas, the traps, and what you should do instead to actually protect yourself. Welcome to Tax Problem Central. I've spent over 15 years helping clients with their taxes and tax issues, and one of the most common calls I get goes something like this. James, I've set up a payment plan with the IRS 6 months ago. I've been making every payment. So why do I still owe more than when I started? It happens all the time. And it happens because the IRS does not volunteer this information when you sign up. So let's fix that right now. If you're new here, subscribe. Every week I break down the IRS moves that catch people off guard. First, let's make sure we're on the same page about what a payment plan is, officially called an installment agreement, and what it actually does. An installment agreement lets you pay your IRS debt over time in monthly installments instead of all at once. Sounds simple, sounds fair, and in some ways it is. But here is what the IRS does not highlight when you're signing up. An installment agreement does not stop interest and penalties from accruing. Let me say that again because it surprises almost every taxpayer I work with. While you're faithfully making your monthly payments, while you're doing the right thing, your balance is still growing every single day because interest and penalties don't stop just because you're in a payment plan. Let me show you what that actually looks like in real numbers. Say you owe $30,000. You set up a payment plan at $300 a month. The current IRS interest rate is the federal short-term rate plus 3%, which has been running around 7 or 8% in recent years. On top of that, the failure to file penalty is 0.5% per month, which drops to 0.25 per month once you're in an installment agreement, but it doesn't disappear. So, on a $30,000 balance, you could be accruing $150 to $200 or more per month in interest and penalties alone. If your payment is $300 a month, only $100 to $150 of that is actually going to reduce your principal. At that rate, you're going to be paying the IRS off for decades, and your total out-of-pocket could be double what you originally owed. That's not a scare tactic, that's just the math. And here's the next thing the IRS doesn't lead into when you're signing up. If you missed a single payment, and I mean just one, your installment agreement can be automatically terminated. And when that happens, you don't just go back to where you started. The IRS can immediately resume full collection activity. That means bank levies, wage garnishments, tax liens if not already filed, and passport certification if your balance is over $62,000. One missed payment, that's all it takes to go from I'm handling this to full IRS enforcement mode. Life happens, people miss payments, and the IRS is not forgiving about it. Here's something that surprises a lot of people. When you apply for an installment agreement, especially if you do it through irs.gov, the IRS calculates your payment based on what they think you can afford. Now, that calculation is often based on income alone without fully accounting for actual living expenses, your other debts, or your family situation. The result? The IRS often proposes a monthly payment that is higher than what you can actually sustain in the long term. And if you just accept it without pushing back, you're locked into that amount. What most people don't know is that you can negotiate. You can submit financial documentation, income, expenses, assets, and make the case for a lower payment. But you have to know how to do that, and you have to do it before you agree to the terms. Once you're locked in, changing is a whole separate process. Now, here's the big one. A lot of taxpayers who set up installment agreements should never have set one up in the first place because they qualify for a better option. First option, offer in compromise. If your income and assets are below certain thresholds, you may be able to settle your IRS debt for less than you owe, sometimes significantly less. But most people either don't know that this exists or they assume they can't qualify for it and they never ask. Second option, if you genuinely cannot afford to pay right now, the IRS can place your account in a status where collection activity is suspended entirely. No payments, no garnishment, no levies. You still owe the debt, but the IRS leaves you alone for a year while you try to get back on your feet. Option 3, penalty abatement. If you have a clean compliance history, you may qualify to have your penalties removed entirely. Here's the bottom line, and I want to say this to you clearly. A payment plan is not automatically the wrong choice. For many taxpayers, it's exactly the right resolution. But you should only enter one after you've explored all your options and after you've negotiated the best possible terms. Here's what I recommend before signing. Get your full IRS transcript and know exactly what you owe, the balances, the penalties, the interest, and the filing history. Next, understand what resolution options you do qualify for. Don't assume a payment plan is your only choice. Step 3, if you do enter a payment plan, negotiate a monthly amount based on your actual financial situation, not whatever the IRS proposes by default. Step 4, make every single payment on time. Set up automatic payments if you have to. One miss can unravel everything. And step 5, always work with a licensed CPA or an enrolled agent. These are the professionals that are authorized to represent you before the IRS and negotiate on your behalf. An IRS payment plan can be a lifeline or it can be a trap that costs you twice what you owed. The difference is knowing what you're signing up for before you sign up. If you have IRS debt right now and you're not sure what your best option is, call my office at 203-589-4077. You will deal directly with a CPA or an EA, not a call center, not an intake agent, just straight answers about where you stand and what your options are. You can also visit dufftaxresolution.com or email inquiry@dufftaxresolution.com. If this video helped you, please subscribe and share it, especially with someone you know who's been ignoring IRS letters. You might save them from a very expensive mistake. Drop your questions and comments below. I read everyone. And next, I break down the offer in compromise because more people qualify than you would think. And the savings can be dramatic. I'll see you there.